Hey everybody, how you doing? Dave Bartosiak here with Zax.com, and welcome to another live earnings preview event. This time I'm doing it Miami style. No tie. Got a lot of sun here. Got a little roasted this weekend, and it hurts to put on a vest and a tie. So really that's the secret. But today we're talking about Under Armour. Now, Under Armour is a huge athletic apparel company. You may know them from the gear that NFL players really rock underneath their pads and such, that kind of Lycra-esque material, but they've branched out since their early days and signed Steph Curry of the Golden State Warriors to a huge shoe deal, and that's where a lot of their growth has been coming from, athletic footwear, apparel sales stemming from that. So that's one of the ways that Under Armour is making money. But one of the headwinds that we have here for Under Armour is the Sports Authority bankruptcy and liquidation. Obviously, Sports Authority was a huge sporting goods company, had retail stores across the country, and when you got a big chunk of your sales coming from a place like that, it's going to have an effect on your revenue numbers. But the good news is that Under Armour had that in. It's already in the expectation, so we don't think that that's going to be any sort of huge surprise coming up on this. One thing that has happened recently is these new Steph Curry shoes that everybody made fun of. We call them the Del Currys, basically for his dad, because they were absolutely hideous. And I'm just going to say it. They were ugly shoes. Anyway, the ugly shoes sold out. So who's having the last laugh? Apparently there's a lot of rec league dads in the Under Armour gear. So anyway, they sold out. So that's all that matters. So that's probably going to be reflected in the upcoming earnings report. And again, we're talking about big-time growth numbers for Under Armour. So we're expecting, 25% revenue growth year over year, hoping they can sustain that pace. Now, if they can't sustain that pace, that's when you're going to see a problem. Because this sort of growth premium that's in the valuation of Under Armour, if that gets sucked out here, that's going to be a big-time hit for the stock. But let's take a look at what these earnings have been over the last few quarters through our price consensus and EPS surprise chart here at Zax.com. So, as always, price, which coincides with the right y-axis, and you notice the huge range here from $7 down in 2011 to $54 where we were in October of 2015. Now, these multicolored lines here represent the evolution of our Zax consensus estimates over time. These are different years. So here's the 2013 numbers, 14, 15, 16, 17. One thing you'll notice, these gaps between these lines, that represents the huge earnings growth here on Under Armour. So that is obviously a very good thing. What's been troubling recently is this dip that we've seen. So 2017's estimates started a lot higher, started to creep back down. 2015 down as well. 2016 has been creeping down along with 2015. So you're seeing the growth projections out there, but now it looks like the 2016 numbers are going to be on par with the 2014 numbers. And again, this is EPS, not revenue or anything like that. So pains here. One thing to notice, these little green arrows, those are earnings beats. We're talking 20 in a row. So 20 earnings estimates beats in a row. That's pretty good. That tells me that Under Armour does a very expectations of analysts. So I wholeheartly expect that they're going to come out and beat that EPS number. But like my basketball coach used to say, numbers don't lie, but they don't tell the whole story. So there's much more to the story for Under Armour here. Let's go into some of the details on the detailed estimates page here on Zax.com. And we can see specifically what we're this quarter. So 90 days ago, we were looking for 4 cents EPS out of Under Armour. Now they're only looking for any. Next quarter's numbers have gone from 28 cents down to 26. That puts our current year down from 67 cents to 58 cents. Puts next year's numbers down from 85 cents to 79 cents. And again, you can see here on the surprise numbers, they tend to surprise. So last quarter they beat by a penny, in line, beat by a penny. So they're going to probably be spot on with that. Again, we've got them here though. Zax rank number 4, sell value momentum style scores of F. Now, what exactly does that mean? Well, we've got different metrics associated with different styles of investing. So there's a value style, there's a growth style, there's a momentum style. I'm the momentum guy. So inside of this momentum score, you're going to get a lot of things that have to do with price momentum. You're going to get something that has to do with actual volume increasing momentum, right? And surprise momentum. So if we're seeing surprises get bigger and bigger, that's going to be reflected in that. If the stock's trading near 52-week high, it's going to be reflected in that. If there's a huge uptick in volume, you're not having any of that right now. As for the growth and the value numbers, those are more your traditional numbers like PE ratios and PEG ratios and the like. So across the board right now, you're talking an F on that. And granted, now the actual Zacks rank is just associated with the actual earnings estimates. It doesn't really take into account any of those other fundamental metrics that you might have in some of the style scores. So really, the Zacks rank number 4 sell right now is based on those estimates to the downside that have caused the current quarter number go from 4 cents down to a penny, okay? So keep that in mind as we're gonna take a look here at the options chain on Under Armour. And again, I'm not gonna tell you exactly what you need to do here as far as whether you should be a bear, whether you should be a bull. I'm gonna go ahead and offer up my humble opinion. Sometimes I'm right, sometimes I'm wrong, but the important part is I want us to talk about it. Go ahead and chime in below in the comment section. I'm hoping this time this video is going to go up just fine. I know we had some problems with our Netflix feed last time. I apologize. We've got it fixed. It's YouTube. Things happen, okay? So let's take a look at the options chain here on Yahoo Finance. So what I do here is I go to the at the money, or at the front week calls in this case. So these are going to expire July 29th, so that's Friday. And I'm going to look at the at the money call and put options. So the 42.50 essentially. Pull up. I lost my calculator. I got to go back and find my calculator. Sorry, guys. There's my calculator. So at the money call, it's trading 203. I'm going to add that to the at the money put, that $1.80, right? That's going to give me the 383. Go ahead and divide that by the 42.50, which is the stock price. And we got about a 9% move is what we're pricing in here for shares of Under Armour. Now, that's a pretty decent move. The other thing I want to take a look at here is where is all the action happening? If you take a look at the 44 calls, we've got 4,800 contracts traded so far today. The open interest is 13,713 contracts. You'll see that that's pretty much dwarfing any other of the price levels here on Under Armour. We do have some decent open interest at the 42.50 calls with 3,700 contracts. And if you go all the way down here, the 45.50s, you've got another 3,200 contracts there. So that's something you want to keep in mind. The at the money, the $44, the 45.50, that's where a lot of the open interest or a lot of the action really has been over the course of this particular options chain. So those contracts have a lot of eyeballs in them, right? Should it come as a surprise that if you're taking a look at the 42.50 contract and you make that sort of 9% move, that you're just past that 45.50 mark? Should not be a surprise. So let's take a look at what let's take a look at the bullish side of things here. If you are bullish on Under Armour, what trade should you look to put on? So I'm thinking let's not do this front week is a problem because you never know what's going to happen, right? You want to catch a little bit of the post-earnings drift, whether it's in the positive or negative direction. So I want to give this thing a little time to move. Now, this is because we're going to be going long on this particular instance. So what I mean by that is you're going to buy, or I'm going to buy the at the money call, and I'm going to sell a call that's just a little bit out of the money. But overall, I'm pretty much, I'm long the call, and I want time to be able to, for this thing to move a little bit. I'm not so concerned with how much money I'm going to lose as far as time value because I'm selling an option further out of money than I'm buying. So that's going to mitigate some of that money that I'm giving away to time, so to speak. If I was on the flip side and I was selling this, like we sold a strangle the other day, then I want it as short as possible because I just want to take it in real quick and put it in my pocket. Now, that's not always the case, but just for this particular strategy, That's what I'm talking about. So let's go back into the options chain here as we're looking at the August expiration. So and again, we got the same thing going on. The 4250s, they have 2,600 contracts. The 45s have 2,900 contracts. So this is kind of the range that I want to be in. So if I want to go long a call spread here, I'm going to go ahead and buy the 4250s. It's going to cost me $2.38. And I'm going to sell the 45s. That's going to cost me $1.25. So that's $1.13 that I'm going to have at risk. Okay? And now the amount of money that I could make on that trade is the difference in the strike prices, which is at $2.50, but subtract what I originally invested, that $1.13, so that's $1.37 that I could make on that. So $1.37 divided by $1.13, that's going to give me the actual percentage. So that's 120% potential to the upside on this. Now, how do I make that 120%? Well, Under Armour would have to close above $45 at expiration on August 19th. If I'm bullish Under Armour right here, I'm confident that following this report, they're going to go ahead and drift higher and get up there. So that's one way that I would go ahead and play this on the bullish side. Now let's flip it to the bearish side. We're going to put together the same similar sort of strategy, except rather than buying a call spread where I'm buying the right to buy the stock at a certain price, I'm going to buy the put spread, which gives me the right to sell a stock at a certain price. Essentially, I'm betting that this thing is going to end up going down rather than going up. So again, we're going to take a look at the 42. Scroll up here a little bit, sorry. Okay. If we look at the 4250 put, actually I'll just go, let's get this a little bit in the money, right? Let's do the 43, okay? So the 43 is going to cost me $2.25. And look at all this action down here at the 40s. 1,200 contracts are traded already today, for almost 1,500 in open interest. So I'm going to sell that one. That's going to cost me $1. That's $1.05, right? So 120. The most that I can make is the difference between these strike prices. Between $43 and 40 is $3, right? Minus the 120 I put in is 180. So that's 150% potential return on this trade if Under Armour closes below $40 at expiration on August 19th. Now, as for which one of these two strategies I think is going to end up panning out, I've got to be on the bearish side with Under Armour here, but with a great degree of caution. And let me tell you why. I think this is a higher risk trade, probably higher than a lot of people want to end up taking on. And I want to clarify something. I'm not bearish on Under Armour in the long run. I think that they are doing some great things. I do like them going head-to-head with Nike in the basketball space, although trust me, I am a huge Nike fan. The other thing is they're going head-to-head against Lululemon in that sort of women's athletic space, which I think is a great idea for them too. Nike's also going there, so it's Nike, Under Armour, Lululemon, but there's a huge market over there that is untapped, I think. So there's going to be some battling there. So they've got multiple arenas where they're going up against Nike and Lululemon and things like that. But they have been having some growing pains a little bit. I mean, not crazy growing pains, but a little bit as of late. That's why you've seen those estimates start to creep back down. And I guess the thing about it is I'm not egotistical enough to believe I know more than these analysts that are dropping these estimates right now for Under Armour. So until those guys really start to turn around and get more bullish on it, I think I got to be cautious and I got to err on the side of being a bear here in this case. So again, chime in below. Let me know what else you guys want to see. This week is going to be crazy because we're going to have Facebook, we're gonna have Amazon, and then I think we've got another one, and I can't even remember which. But keep a lookout. I know we're gonna do those two for sure. Maybe Google. But go ahead and chime in below. Let me know if there's a stock that you want me to talk about this week, a trade that you want me to discuss, and we'll just kind of go from there. So I will see you Wednesday. That's our next time here. That'll be Facebook earnings on Wednesday. So thanks for joining me, and I'll see you then.